As of October 3, 2024, the US dollar has shown resilience but remains influenced by several key factors. The Federal Reserve's high interest rates, still above those of major economies, continue to provide support to the dollar. However, with potential rate cuts due to cooling inflation and slower economic growth, the dollar could face downward pressure. Economic sluggishness in Brisbane and the UK has limited the dollar's depreciation against these currencies, but a shift in global economic momentum or changes in the US monetary policy could lead to further weakness in the dollar. In today's review, we're looking at the US dollar. So on the monthly, the weekly and the daily, first off looking at the trends. On the monthly, we're broken into a bearish outlook at the moment. We did have also a bearish divergence here that's played out quite nicely so far. Lower highs on the CCI versus higher highs on the price. Now it's been a very long-term bearish divergence. And you can see they're marked by that rectangle. It's already hit our minimum target range and looks like it may fall further. The CCI is still dropping, although there's a slight rise in this month so far. In October, there's a slight rise there in that bullish candle. And the way we mark this divergence, for those new to the channel, we do a Fibonacci retrace from the high. We take it to the previous low, and that would have been that point there. That was a recent low, and that's at 23.38% retrace level on that. Now, if it falls much further, then we look at the next level, which will be the 50% level. If it falls below the 38%, which is where it's hovering currently at the moment. On the weekly, it's also been bearish for a number of months now. And notice with a big bullish candle in the last week so far, we were slightly pulling to the upside. So just be careful of that. We might see it pull towards this moving average range of the CCI, but also the moving average of the price chart. So bearish at the moment on the monthly and the weekly, but it's also broken up already on a bullish momentum on the daily. Now notice there we've also had a bullish divergence. If I zoom out, you can see there if I draw a trend line between that low and that low, that's a lower lows on the price chart versus higher lows on the CCI, and that's a bullish divergence. And what we do now is we draw a target range, so we take it from that low to that high. You can see there it's already hit the minimum target range that we do anticipate pulling back to. So if I draw a little rectangle there just to highlight the target range of the 23.38% retrace level, it's already entered into that range. I don't trade these divergence, these retraces. It just tells me that if you're going short, number one, we look at the CCI to see if it's broken up to exit the trade. But secondly, this also gives you an idea that potentially we're going to get further upside. Now, we take each of these Fibonacci levels as if you like, a support resistance area. And if it breaks higher than this 38% level, then we look at the next level, which would be the 50% level. Now, if we go to the micro charts and we use the daily as a reference, so we only take long trades if we're trading on the hourly, and I've got here the hourly, but you can apply this to the 15-minute, the 2-hour, 4-hour, etc. So we only take long trades, and I'll mark the long entries there with these arrows. So again, you would have taken these long entries on the hourly in accordance with the bullish movement on the daily. And the latest trade we've had here was that point there when it broke above the CCI range on the CCI broke above its moving averages, but also above the moving average range of the price chart, and that would still be in the trade as we speak. You can exit in a couple of ways. You can exit it when the CCI is broken into that moving average range, so you would have gotten out at that point there. Or if you're a bit more tolerant of risk, you can probably let it go until it breaks into that moving average range, and it just escaped that by hovering over that moving average, and it's still rising. So again, you could have entered it had you taken the first exit strategy. You would have entered another long entry on that candle when it went sideways, and you'd still be in a trade today, and you probably would have exited on that little red candle there when it broke into that moving average range. So there's a couple of ways of exiting the trade. To support us more, make sure you hit that like and subscribe button and share the videos. But for some more insights into some blue chip share scans, I do a weekly report, and in that report we also look at insider information for shares that are trending in a bullish manner.